Hi, this is James Shogue at Westpac with our end of day report for Wednesday, April the 25th from London. Look, it was a positive day for equity market sentiment in Europe today. The better than expected Apple result, which was reported after the US market closed yesterday, has actually had quite a powerful influence on equity markets. It's one of the reasons why the US market is up again today as well, despite some disappointing news on the US economy and also in Europe, or the UK at least, we had some disappointing news too. In fact, developments pretty much everywhere were pretty disappointing today, with the exception of the Fed statement accompanying their interest rate decision today, which sounded just a little bit more upbeat in terms of the way it described the economy. Perhaps inappropriately so, but we'll see about that soon enough. So just running through the data today actually. In the US, we had durable goods orders for the month of March. They fell 4.2%. A big chunk of that was aircraft orders, and we knew that that's always volatile, and we knew it was going to fall. But even excluding transport, we saw a 1.1% fall in orders, and quite unusually, the core capital goods component, which excludes defence and aircraft, it fell 0.9% in March. That's the first time since the end of the recession in 2009 that the last month of the quarter has posted a negative. There's something funny about that series that's meant that you usually get a rise in the last month of the quarter, but it didn't show that this time around, so that's another reason to be a little bit concerned about the weakness of the report. And there was broad-based weakness across a range of categories. Machinery was down, computers were down, metals were down, and in fact the only significant gain was in defence, up 10%. And we saw, that's actually the third month running that we've seen defence orders rise. Autos were about flat. They haven't actually posted a fall though for 6 months or so. That was it on the US data front. In Europe, there was no major economic data, but what was significant was that ECB President Draghi sounded a lot more cautious about the economy, or concerned even. Less confident is probably the best way to put it. He was talking about the prospects for growth this year. He talked about the risks to the downside, and he didn't seem as convinced that the fourth quarter of 2011 would mark the low point for the European growth story. And he talked about underlying inflationary pressures not being a significant concern. He talked about them, described them as being modest. Now in the statement that accompanied the April ECB meeting, there was still mention of upside risks to prices. Although the overall price risk was balanced, the downside risk coming from the slower growth story, there was still mention of those upside risks. He wasn't as inclined to talk about that today. I think there's a possibility that he could be possibly arguing as soon as the May ECB Council meeting for a bit of a shift in their language, perhaps signalling that a rate cut or some form of further stimulus might be in the offing in the not too distant future, possibly as soon as June. Of course, the ECB Council meeting is next week. So that's something significant. The Bank of Greece revised down their forecast for 2012 economic growth, if you can call it that. They're looking for a 5% contraction in the fifth year of their recession. Previously they had a 4.5% forecast. I mean, when you think about it, we've got Greece in recession, the Netherlands are in recession, Italy's in recession, Spain is in recession. Oh, and also today we know that the UK is in recession. We saw the first quarter GDP numbers. They showed a 0.2% contraction, and that follows a 0.3% contraction in the fourth quarter of last year. So even with independent monetary policy and a floating exchange rate, the UK, undergoing fiscal austerity, can't manage to grow. Imagine how tough it must be for most of the economies in Europe, where they haven't even got their own independent monetary policy or the ability of their currency to depreciate relative to the rest of Europe. So pretty much bad news all around there, really. The Fed came out at with their statement just after 5:30 London time. A couple of tweaks in the language there. They talked about the economy expanding moderately, as they did in March. They noted some signs of improvement in the housing sector, although it remains depressed, as they said in March. They expect economic growth to remain moderate over coming quarters, as they did in March. However, they also then added that it is then expected to pick up gradually. That was a new phrase. Previously, they just said they expected growth to remain moderate over coming quarters. Inflation has picked up somewhat, they said, compared to it being subdued in the previous report, but they still noted that inflation expectations have remained stable. The conditional commitment to keep interest rates at exceptionally low levels until the end of 2014 remains in place, as do the various programs. Operation Twist is due to run out at the end of June, and there was no indication what might replace that, if anything. Now, I'm doing this report just before 7 o'clock in London. In a few minutes' time, the Fed will release the individual forecasts of the FOMC members, which may have changed somewhat since the previous release back in January. And then 15 minutes later, we get Ben Bernanke giving his press conference, the one that always accompanies the two-day Fed meetings. So there are two developments that might offer some direction to markets. My punt is that given we didn't get much in the statement, certainly no change in terms of the monetary policy outlook, I don't think we're going to get too much revealed by Bernanke this evening. But we'll know in a few hours. Or we may have known in a few minutes, but certainly in a few hours' time, I suspect nothing fresh will have emerged. Okay, just quickly giving you some numbers then. We've got the London market, the FTSE, down, up 0.16%. Remember, recession reported there today, but they still managed a modest gain. Thank you, Apple. The French market up 2%, the Germans up 1.7%, the Italians up 2.9% today, and the Spaniards up 1.7%. Commodity markets are higher, although not dramatically so, with gold up 0.01% at $1,644 an ounce. Oil's up 0.75% at $104.35 a barrel. Copper prices up just under 1% today. The Aussie dollar, it's at 1.034 against the US dollar. It actually temporarily dipped to below 1.03 not long after the Fed released its statement an hour or two ago, but it's back up towards the 1.035 area. We're just under that at the moment. Okay, I'll be back with more tomorrow, and as I say, watch out for anything that might emerge from the Bernanke press conference in the next hour or so.